Winston-Salem, Josie out of Oakland, California. Is that Losire out of Charlotte, North Carolina? Who else is here? Let's see. I'm looking to see what cities you guys are from. There we go. I see Los Angeles. Akeem Alugbala. Is that right? Did I say that right? Forgive me if I mispronounced that. I can practice that when we meet in person. Catrice Ross, Chicago. Keith and Tonia, Baltimore. Very nice. Shania, Grand Rising to you too, out of Kansas City. Akeem Olubala. Oh, so the G is silent. Okay, well, Lil Wayne said G's move in silence. I don't know if y'all remember that in a song. The G's move in silence like lasagna. Get it? Because the G is silent in lasagna. That was a lyric from Lil Wayne. He's a genius, very toxic, but he's still smart. Let's see. All right, so Boston in the chat for Darlene. Good to see everybody. All right, and good morning to you too, Dorothy Van Buren out of Oakland. I see you. All right, so let's hop into this conversation today and begin at the beginning. Okay, so the first thing that you should understand about this economy is that there's still more and more talk about a recession. I know we've been talking about recessions for like 3 years now, it seems like, or at least 2 years, really since the pandemic. But a lot of experts actually believe the recession will not be that severe, and it's going to happen probably this summer. Now, if you're talking about the dangers of the recession, though, the things you got to watch out for are the fact that the right now Congress is fighting over the debt ceiling, and this battle over the debt ceiling could exacerbate or worsen some of the problems that you see in the economy. And then also what's happening today is that a lot of tech companies are going to release their earnings, particularly Alphabet and Microsoft. The release of these numbers is going to play a big role in whether or not the market concludes that we're headed on a downward trajectory, right? So everybody's waiting for the other shoe to drop. What they're waiting for is they're waiting for corporate earnings to drop. They're waiting for corporations to show up and say, look, we're not making as much money as we were before. And that is going to facilitate what they expect to be another massive correction. So if you ask me, if this is a great time to really dive in head first and start buying a bunch of stock, I would probably say not so much, right? Cautious optimism in the sense that if you think long term, it's going to be fine. But if you're waiting for opportunities, maybe having cash on the sideline, this might be a good time to do that. Or if you, last night we spent a couple hours discussing stock options in the masterclass. If you want to join, just go to my website, boycewatkins.com. There should be a link for the stock options masterclass. And one of the things that we talked about was how you can calibrate investing strategies where you can be a little bit bullish, but not so bullish that you get burned. Right. So a little bullish, a little bearish, kind of in the middle. So I would almost say that right now, what I've been doing is stacking my cash because I'm kind of waiting for that shoe to drop, because then at that point I can go buy a bunch of stuff really cheaply and make a lot of significant moves, because the uncertainty is whether or not the recession is going to kind of reveal itself in this quarter. There's just so much stuff in the air that people aren't sure about. People aren't sure if the Federal Reserve's rate hiking campaign has been effective enough to actually reduce inflation. That's what they've been trying to do, reduce inflation and push the economy into recession. And then also you have the situation with the banking crisis where everyone's wondering, okay, is that it, or is that kind of behind us? If it's behind us, then it's fine. But if it's not behind us, then you could have some sort of financial calamity around the corner. And then to make things even more complex, Ray Dalio, who's a really smart guy that I really like, he mentioned some factors that he said could cause long-term economic problems in terms of overall economic stability for the nation. And he talked about things like the wealth gap, creating all this division that exists in America. America's more divided than it's been in a long time. He talked about debt. I think he mentioned that debt is like just insanely high. Government debt is crazy. The government then prints lots of money so it can pay its debt, which is kind of a funny little trick that they have that they think is going to work forever. That if we just, go in debt and then print money to repay the debt, that the world isn't going to figure out what we're doing. Well, the world is figuring that out. And what's interesting is that I heard a person make a good point about African countries being kept in debt through that same little game, that basically the US government has no problem with debt because they can just print money and repay it. African countries, if their debt is denominated in dollars, they can't print dollars. They have to actually earn dollars, right? And not just print them. So it keeps a lot of these countries in the middle of an economic struggle. So, are these things serious? Yes, they're very serious. They're things you should look out for. But the world isn't going to end tomorrow, and I wouldn't act as if it will. I think the stock market is still going to rally, particularly once this recession talk is kind of behind us. Once we get the go ahead that inflation is under control, then that at least frees up the Federal Reserve to do the things they need to do to combat a recession if one comes around the corner. So if they know inflation is cool, then what will happen is if the economy does dip into a recession, then they can start lowering interest rates again, right? So if you, I don't know, if you have some sort of interest rate locked in on some investment you made or some CD or something that you have, then you'll probably be glad for that, because what's going to probably occur is that once the recession kicks in, the Fed's going to stop their rate hikes, and then they're going to start reducing interest rates. That tends to be good for the stock market, and that tends to be good in terms of accelerating the economy and getting through a recession. So when I talk about a recession, I don't want you to feel like, oh my God, a recession's coming. It's going to be terrible. No, it's not going to be terrible. It's just going to be, natural. It just happens. It's everything ebbs and flows. Right. Another thing about ebbs and flows actually is right now you might have also noticed that there are some companies, particularly tech companies, that are doing layoffs. Disney just announced that they're laying off a few thousand workers. I know Facebook's laid off thousands of workers, et cetera. And these layoffs are part of the indication that we could be going into some sort of economic slowdown, because the unemployment rate's going up, especially for tech workers and things like that. And I personally think that there's also that secondary agenda where corporations were, kind of concerned about, the trouble getting workers and people doing things like quiet quitting, because for a short amount of time, a lot of power shifted in favor of workers. So I wonder if corporations are kind of saying, like, look, if you are quiet quitting on your job, we're going to let you go. You're going to be the first one to be fired. You'll be like, Tucker Carlson and Don Lemon. It's sitting around without a job if you don't do your job. So ultimately, these are some variables that I see happening right now. Now, one thing I want to mention it to everybody as we move forward is we found our hotel for the All Black National Convention. We're going to be at the Omni Hotel in Atlanta. And if you go to allblacknationalconvention.com, you can go ahead and get your passes if you'd like to do that. We will secure the deal very, very soon, but that's the hotel we picked, the Omni Hotel. It's a beautiful hotel. I think you guys are really going to like it. And what else is happening? That's pretty much it. All right, so what I'm going to do is I'm going to start answering some of your questions that you guys submitted in advance. And so let me open these questions up. If you log in at theblackbusinessschool.com, you should also see later on today a list of stocks. Just go into what Dr. Boyce is buying, and you'll see a list of stocks that I'm buying that I think are going to do well in the future based on my research. So feel free to go to log in and take a look at that. All right, let's see here. Now, Natasha's asking about Clover Health. What will happen to Clover Health if there's a stock split? Well, what will happen with a stock split is that if it's like a 2-for-1, that just basically means that for every one share you had before, you now have two. But it doesn't mean you have more ownership. It just means that you have the same economic value. You just have more shares. So if the shares are trading at 78 cents, then a 2-for-1 would probably reduce the share price from 78 cents to half of that, which would be 39 cents. So you'd have two shares worth 39 cents each as opposed to one share for 78. I also am very sorry, Natasha, that the stock plummeted. Clover Health was a SPAC, a special purpose acquisition company. SPACs were unfortunately this fad that were selling really, really well for a while during the pandemic, because everybody was selling everything during the pandemic. And then when the economy went south and also money became more expensive to obtain, you started seeing SPACs kind of going out of style. And once they went out of style, people stopped buying them, and then the whole market just kind of went to hell. And so ultimately, that's just kind of the nature of the game. That's why I say be really, really careful with investing, especially at a time when everybody's just sort of high on drugs and feeling like the market can't go down and there's money everywhere. That's literally the time you got to be the most careful with investing, because people will get you to invest in damn near anything. There was even when crypto first took off a few years ago, there was something called BitConnect. Anybody remember BitConnect? And everybody thought BitConnect was this great thing because all these black people were going on BitConnect and they were literally doubling their money like every couple of days. It was kind of crazy how they were literally doubling, like doubling and tripling their money really fast. And somebody brought it to my attention and they said, Dr. Boyce, this is actually a Ponzi scheme. If you look at it and you look at the definition of a Ponzi scheme, this is what it is. And I said, oh, I didn't know that. I looked at it and I said, oh yeah, you're right. It is a Ponzi scheme. So I did a video and I said, don't, be careful with BitConnect because it's a Ponzi scheme. Now, the problem was that it was very popular. A lot of black people were invested in BitConnect because, if something's giving away money that easy, a lot of people are going to chase it down. Well, in a way, it reminds me of the TV show Snowfall. In Snowfall, if you were a dope dealer in the 80s and making all kinds of money, the smartest thing you could do is make a bunch of money and get out quickly, because you know how these things end. Snowfall ended with everybody dead, in jail, on drugs, whatever, right? So if you were going to do it, if you were crazy enough to be a dope dealer, then the smart thing to do might be make about $20 million in the first, 9 months and then leave, like get out of the game, because it's not going to end well. Well, the same thing is true when you talk about investing in things like BitConnect. If you see something like that and it's a Ponzi scheme, well, what happens is greed becomes the devil. Greed is what ends up causing you to sort of hang out. You're doubling down, you're tripling down. You're thinking, okay, I made 10,000, I can make 100,000 now. And next thing you know, you end up losing everything. So eventually, so when I did the video about BitConnect and I was telling everybody, this is a Ponzi scheme, don't mess with this stuff, this will get you in trouble. I had a lot of pushback. I was getting a lot of emails from people that were very respectful, but they were saying, Dr. Boyce, I don't think I don't think you really understand. This is okay. This is great. I'm a regional. They were even picking people to be like regional managers of BitConnect, right? And the thing was that so these regional managers were reaching out, trying to come on my channel to talk about BitConnecting, so to give the other perspective. Now, I'm all for free speech and all that, but I felt like this kind of went into the realm of being dangerous speech, because I knew that the reason they had so many people putting their money in was because BitConnect was so persuasive, right? So I just couldn't do it. I said, no, I just don't want to have this debate. I'm just not a fan of it. Well, lo and behold, eventually BitConnect went belly up. And when it went belly up, they took everybody's money and they ran. So people that had money in there, that money was gone. They never got it back. And this happened all throughout the whole crypto industry, which is why one thing that happened this week was Chamath Palihapitiya. I can't pronounce his name, but he has a long Indian name, and he was a big investor in companies like Facebook, and he's a billionaire that was a big believer in crypto. He actually made a statement that surprised me. He said crypto is dead. He claimed that crypto's dead because now the regulators are coming and the regulators are going to just destroy it. And the SEC has never really properly regulated crypto. And once they do, they're going to put the hammer down. They're going after exchanges like Bittrex, which is now going to shut down its U.S. operations. They're going after even Coinbase, which is actually talked about operating overseas. And I think it's just crazy. Now, I've told you guys, I'm a believer in Bitcoin. I still am. I'm sorry. I just can't buy the idea that Bitcoin's going to just disappear. I believe in 5 years, Bitcoin's going to be worth a lot more than what it is right now. I just believe that. Now, again, because I believe that, that does not mean I'm right. Right. And also because I believe that, that does not mean that I should bet the farm on it. Right. But because I believe that, what I did do was I put like maybe 5% of my portfolio into Bitcoin, just in case I'm correct, because I just can't imagine Bitcoin going down like everything else. So anyway, when you have the high economic activity and everything's going up, that's when you just start seeing the scams coming out and you see all kinds of chaos. Like right now, for example, another area that's booming is artificial intelligence. And so with artificial intelligence, not only are you having lots of people jumping in, figuring out how to make money, everything from investors to people offering seminars on how to do AI, stuff like that. But you also have scams. So one scam, for example, was like where they can, I they can replicate a person's voice. So you might get a call from your sister saying, if you don't give me the money, I'm going to go to jail or whatever, right? So you wire the money to the person you think is your sister, but it's really an AI voice pretending to be your sister. So this tends to just occur all throughout history. Whenever there is an economic boom, there's also a boom in the number of scams that are out there. All right, so let me answer some of the questions you guys submitted. Let me see here. All right, and by the way, speaking of AI, don't forget you can go pick up that list of AI stocks I put on my website, boycewatkins.com. There's a list of AI stocks that I'm buying. So if you want to invest in the AI revolution and see where I'm going with this, feel free to go to boycewatkins.com. The list is right there. All right, so let's see. Mr. Jan Jasmine. I see. Yeah, the question about tech support. I forwarded your email personally to the right people on the team, and I wanted to ask them what was going on with that. So you will be hearing from somebody very, very soon. And also, if you have any issues with anything in the Black Business School, your membership, whatever the case may be, just email support@theblackbusinessschool.com. It's kind of terrible, but that's really how they're thinking. So a lot of people will interpret a positive jobs report as a negative for the stock market. So stocks will go down because the economy is doing so good. That's crazy. But that's it's no different from like if when you apply to college, and you make more money and then you say, oh man, that sucks because now they're gonna make us pay more tuition. They're gonna, the student loan package isn't gonna be as good. So it's kind of the same sort of thing. Let's see here. Okay, so let's see. Terrence is asking about the Hyundai Motor Company. Okay, so let me grab my cell phone and look up this company. And if you put stocks in, when you send your questions in advance, if you put a stock in there, I'll look it up for you. All right, the ticker symbol is HYMTF. Okay, it sounds like an over-the-counter stock, HYMTF. Okay, yeah, it's not even on this company, the Hyundai. Oh, Hyundai Motor Company, HYMTF. Okay, let me try. Let me look it up on Google then, because I can't find it on Robinhood. Okay, Hyundai. Obviously Hyundai's a great company. When I look at the past 5 years, though, the ownership of Hyundai stock has been a negative. The market valuation has dropped 20% over the last 5 years. It's gone up about 1% in the last year. I would say with a stock like this, I would only consider buying it if you see some sort of a dip that you think is temporary. One thing that creates an opportunity in investing that's really kind of stupid, but it's true, is that if you have something temporary that happens to a company, it can temporarily dip the stock price in a way that's almost completely irrational because the company is exactly the same. So I don't know. Let's say that something happens and the Federal Reserve makes a bad announcement, or Disney's earnings are not what everybody thought they would be, and the company stock drops, 5-10%. There are some people who say, well, Disney's still the same company. They got the same management they had last week. They have the same everything that they had before. This could be, a bargain, right? So buying a certain stock on a bad day could make that difference that allows you to get the positive ROI that you're looking for. But the thing about Hyundai stock is that it's for the last 5 years, it's pretty much just been a mediocre holder of value. So it doesn't make you stupid if you were an investor in Hyundai stock. It would just say that it's almost like having a savings account where you put $1,000 in there and $200 leaked out, but at least you have $800 to show for it, which is better than nothing, right? Remember, if you had taken that money and spent it, you'd have $0 to show for it. So that's why even a bad investment or a mediocre investment typically is better than no investment at all, because at least A, you've got something to show for it, and then B, you have the possibility that something positive can occur, right? So Hyundai, it seems like a good company, but the stock doesn't seem to have performed very well the last 5 years. But past performance is no indicator of future performance, and that's what makes it even more confusing than before. All right, so let me, what I'm gonna do is move on to your next question. I'm looking specifically in the Woofle form you guys submitted. If you want to leave me a question for next week, next Tuesday, just log in at theblackstockmarketprogram.com, and you can put your question in there and I'll answer your question. All right, let's see. Dr. Boyce, Terrence is asking, what are your thoughts on the company Hypercharge Networks? Okay, so their ticker symbol is HCNW. WF. Okay, that sounds like another small company, but or another over-the-counter stock or something. Or let me see, HCNWF. Okay. Okay, so it's not coming up in Robinhood. So let me try HCNWF stock price. Okay. All right, so Hypercharge Networks has gone up 66% in the last 6 months. It's dropped 10% today, 14% in the last week. So this stock has a lot of action happening. This is a company that's not making money. I will be really careful about messing around with small companies that are losing money. It doesn't mean you can't make money with the investment. It just means that it's pretty risky because you're moving out of the era of easy money. When you had an era of easy money, what would happen is you had companies that were able to build off a hope, with just a hope and a dream. They would just simply, go borrow a bunch of money from the bank, and they would pay almost no interest on this money because money was basically free. The Federal Reserve created those conditions. I think at some point the chickens are going to come home to roost. At some point, this playing economic god is going to come back and haunt them. I really believe that. I just think that they're being very sloppy with things. However, companies could just go get the money they needed, and just as long as you had access to capital, you could do whatever you wanted. There are companies. I think Uber, if I'm not mistaken, has been losing money. Like, I want to say $1 billion a year or something crazy every year since they started. Amazon lost billions of dollars, just so much money, because they were building this market base. And so the model became one where it's like, who cares if you're making a profit or not? That doesn't matter. You just build up your base, and then eventually you monetize that and you start making money. That's what Elon Musk is doing right now. Elon Musk is upsetting a lot of his shareholders because he's lowering the prices of Teslas, right? And what's happening when he's lowering the price of Teslas is that he's selling more Teslas, but he's reducing his margin, his profit margin. So they're kind of saying, dude, stop that. Like, you're hurting our profits. Now, what Musk's thought process is that he's thinking, if I keep reducing the price of Teslas, I can sell a bunch of Teslas. And once I get Teslas in everyone's driveway, I can then come back and remonetize by selling, software as a service, right? And I don't think that's a bad idea, because a lot of companies have done that. What makes the idea a little bit challenging is that that's an idea that would have worked better in the previous economic environment before the Federal Reserve started tightening with interest rates. Since the Federal Reserve started increasing interest rates, companies that did that same model, like Netflix and others, even Disney was doing that, they stopped doing that. They started buckling down and trying to actually become profitable. Like, I remember when Netflix did something that I thought was just absolutely crazy. Netflix literally went out and borrowed like $12 billion to make more content. And I was like, why does Netflix have to borrow money to make content? They're already making $2 billion a month on the content that they have. Why can't they use that money and just reinvest it and make their content that way? Is the content arms race that crazy that they've got to go another 12 billion in debt, or 10 billion, whatever the number was, in order to make more content? And apparently that was the environment they were in. Now I think a lot of that has changed. Now Netflix doesn't even report things like subscriber growth. That's no longer the arms race. Now they talk about cash flow and profitability and things like that. And now you notice they're cracking down on password sharing, things like that. So the environment has kind of shifted. And so I'd be curious to see if that works for Elon. Now let me go look at that company. Oh yeah. So with this company, Hypercharge Networks, I see it as a speculative investment. I would not say that it's a bad investment. I'm looking to see what the company does. I assume they do something with maybe charging stations or something. Is that what it is? It looks like it's a Canadian company. Yeah, they're being compared to ChargePoint. So it looks like they're connected in the EV space. So if I'm invested in EVs, which I am, I'm not really looking at one company that's going to be my magical savior, because remember, in a new industry, you don't know which companies are going to emerge as the champions. You don't know which company is going to dominate 10 years from now. All you know is like that there's like a group of contenders. And instead of investing in just one of the companies, why not invest in all of them? Why not, find like an ETF that it specializes in EVs and just say, let me just get a little piece of everything. So that because here's what you know, and here's what you got to look at what you know and what you don't know. What you know is that EVs are going to be a thing of the future. You know that EVs are going to be big. You know that EVs are going to be everywhere. What you do not know is you do not know which companies are going to dominate the EV industry. You have no idea. You think you know, but you don't. Just like when the internet first started, we knew the internet was going to be a big thing. Anybody in the year, how many of y'all remember the year 2000? How many of y'all were like functioning adults, or at least like in high school or college or something in the year 2000? Anybody in here? Okay. So how many of you, like, I want you to go back and go back to the year 2000. And I want you to ask yourself, in the year 2000, did I know that the internet was going to be big? Did you know that? Did you think it was a fad? Did you think it was like, because remember hip hop, they used to think hip hop was a fad. Remember that when they used to talk about hip hop, like one day it's going to go away? Right. So you had a time where everybody, there was a time when everybody knew that the internet was gonna be a thing. What you did not know was which company was going to dominate. So if you had taken the approach of saying, oh, well, I know the internet's going to be big, so let me invest in Netscape, right? You would have been wrong. You would have lost all your money. Or I know the internet's going to be big, so let me invest in AOL because you've got mail, right? That was really big. AOL didn't survive, right? The best players were after AOL, right? Google and Facebook and Apple. So ultimately what I would say to you is if you're going to invest in an industry, pick the industry. Don't just pick individual stocks. Or if you invest in individual stocks in the industry, maybe mix it up a little bit and grab a bunch of stocks in the industry, right? That way you're just kind of there for whatever happens. All right, so let me answer more of your questions. Okay. So we talked about Terrence's stock, hypercharged networks. Okay. And let's see. Next question is from Geneva Lockwood. What account level is needed to trade options on Robinhood? I believe account level 2 is what you need to trade options. You can check with their tech support. They can confirm that, but I believe it's level 2. I think level 3 allows you to do things on margin. Let's see. Jan Jasmine is asking about the book club. Yeah, Jan, I love you, man. I appreciate you asking about me and stuff like that. Yeah, I admit sometimes I can't do everything as much as I want to, and I had to close down. Like I'm doing the tour for the book and everything, where we're doing the book club meetings. By the way, thank you to those of you who joined us in Houston. I hope you got the value that you were seeking. And I wanted to do these live events because I wanted everyone to get a chance to be together in the same space so you can invest together and meet each other and everything. And the problem is that, when family calls, you got to go deal with that. So I had to shut that down or shorten it just because I absolutely must be with my parents. Like I have to do that. So until the All Black, I'm going to do Dallas. That's the last event for a while. And then I'm going to do the All Black National Convention. But yeah, so that's why. So sometimes if I have to change something or move something, it's because of that. Okay, so thank you for asking about that. I appreciate it. All right, so let's see. Next question. Mark Irving. I have $20,000 to invest. I want to buy stock, sell covered calls, generate $500 per week without putting all $20K in one stock. What would you do? Great question, Mark. First off, that's definitely a better question for the Prime program. If you go to drboyceprime.com. drboyceprime.com is where we talk about selling covered calls and stuff like that and generating income. It's really a fun way to make money. I sold my calls yesterday and I made my money. Now, what you can do is if you log in at drboyceprime.com, you can find something called Dr. Boyce Moneymakers. And these are stocks that I personally bought just to sell the covered calls on those stocks. Now, the thing about selling covered calls is that you got to cover your butt. And covering your butt means that you don't want to get too greedy. Greed will always destroy you financially. You want to see an example of how greed will ruin you? I promise we're going to get back to the options question, but I love seeing financial lessons everywhere. Does anybody watch the TV show Snowfall? How many of y'all watch Snowfall? Anybody follow Snowfall? It's a great show. It's basically about this guy who becomes like this drug kingpin. And he's, a Damson Idris or something. They always pick these British actors to play black people in America, which I think is odd. I love my people from Black London and Black England, so no disrespect. But I think that's so funny, when you have this guy that's from England who speaks like he's from Compton or something. But anyway, on the show Snowfall, you have this guy who who's courageous. He's smart. He could have been anything, but he becomes a crack kingpin. And in his quest to become a crack kingpin, he goes through all these experiences and he gets exposed to a ton of money and a ton of opportunities, a ton of danger, everything else. He survives it all. He does pretty well. Well, toward the end, though, just a spoiler alert, it doesn't end well for him. He starts off as the kingpin, the baller, and then he ends up as basically he ends up looking like a crackhead, but he's really just an alcoholic. At least that's how they portrayed it. I wasn't sure which one he became, but yeah. So I'll show you the imagery of the show. It's a great show. So here's here's what he is as a kingpin, and then after being a kingpin for a while, he eventually becomes this guy, right? The guy on the right, dirty t-shirt, holding a bag with a bottle in it, dirty pants that probably got pee in them and stuff, and rotten missing teeth and everything else. So you're like, okay, how do you go from this to this? And let me tell you what killed him. What killed him was he was infected by a virus, a financial virus, the virus of greed, the virus of greed. Because, this guy was making millions of dollars a year as a drug kingpin, but he started to really have bigger and bigger ambitions in terms of what he wanted to do with his money. And because his ambitions became so big and he wanted to make so much money and he wanted to just keep going up and up and up. And I see this happen all the time with business owners and stuff who can't, instead of counting your blessings from the bottom up, you count from the top down. So instead of focusing on what you have, you focus on what you don't have. And what can happen is exactly what happened to this character. I've always told you guys that making money and building wealth or a wealthy life comes down to health, wealth, and relationships. And in fact, most of your wealth is not financial. Most of the wealth that you have are things that money can't buy, like your health. Like how much would you pay to be healthy again if you're sick or if you're old and dying? If you ask a billionaire, which would you rather trade? Would you trade would you rather have your health or would you rather have your money? Most billionaires would say, I'd rather have my health, right? So your health, your wealth, and your relationships. And what happens in a lot of cases, if you don't understand wealth on a fundamental level, on a spiritual level almost, then what'll happen is your pursuit of wealth, that greed will infect your soul to the point where you will destroy everything else in your life that matters. You'll destroy your relationships, and next thing you know, your kids hate you, your wife is leaving you, and then you destroy your health. You're old and sick and fat, diabetes, cancer, heart disease, strokes. I told you these are the four horsemen of death. The four horsemen of death, the four things that kill Black people the most are cancer, heart disease, Alzheimer's, and diabetes. Those are the four things that they said tend to lead to death. And the four things that help you avoid those four things. My wife and I just went through a whole book on health and all that because health is more important than wealth. We talked about that. The four things that help you avoid it are mental health, exercise, diet, and sleep. Mental health, exercise, diet, and sleep. So the way I remember that is the good stuff has the acronym MEDS, MEDS. So in my mind, I say, if you take your meds, you avoid CHAD. CHAD is the angel of death. CHAD, CHAD, is cancer, heart disease, Alzheimer's, diabetes. This is how I like to remember things in analogies and acronyms. That's what we do all throughout the Black Business School. That's how we teach wealth to kids and stuff like that. So that's my acronym. If you take your meds, you avoid CHAD. CHAD is the angel of death. So where am I going with this? All right, so I promise you, I know I talk a lot about stuff, but I really want to make sure I emphasize this point. So when you watch the show Snowfall, the show Snowfall is nothing but a financial lesson. That's all it is. It's a financial lesson about financial psychology. That's what I wrote my dissertation on. The thing about financial psychology is that, when you're an investor, you have to watch out for some of the demons that can destroy you when it comes to wealth building. Greed is one. Fear is another one. If you operate solely on fear or on greed, those things will destroy you. So this guy in Snowfall was infected by both of those diseases. He got to the point where he got so ambitious and he didn't, think about the fact that he had $10-20 million sitting around. He wanted $73 million. And so to get this $73 million back that someone had taken from him, he destroys his relationship with his mother. He destroys his physical and mental health. He ends up running around killing people. He loses his girlfriend. He loses his child. He ends up killing his friends, and just literally it just deteriorates his life, deteriorates his soul. And so his relationships were all dead, and his health was dead, and his wealth was gone at the end. So ultimately, the way I look at that is, and let's go circle back to this question about stock options. Okay. When I'm talking to you guys, when we're in the Prime program and all that, and we're talking about selling stock options and all this other stuff, I don't want you to get caught up in fear or greed, right? I need you to understand how risk works. I want you to understand what it means. When you build your portfolio, if you're going to go and take that 20,000 and turn that into $500 a week, that's easy to do actually, without taking a ton of risk. You can easily take 20 grand and turn that into a $500 a week business that requires you to do absolutely no work whatsoever. And anybody who isn't in there, who doesn't understand, who's curious about it, I did a training where I explained the fundamentals of it. If you go to boycewatkins.com, there's a training called How to Make Money Without Working. I know a lot of you liked it. It's right there available. So feel free to go to my website and take a look, boycewatkins.com. But basically, so what you do really, if you want to turn the 20,000 into a $500 a week income, is I would pick some. If you pick risk, the riskier the stocks you pick, the more protection you have to have. Right. So if you pick a company like Coinbase won't just 20 grand worth of Coinbase, especially if you use something like Robinhood Gold, where you can actually get leverage and turn that 20 grand into 30 or 35,000. That'll generate more than $500 a week. I think you could probably make, I don't know, something like, let's say you bought 400 shares and the options are trading for $2 each. Yeah, you can make $900 a week on a Coinbase investment of that magnitude. Now, the reason that I wouldn't just jump out and do that is, number one, you're not diversified. All your money's in one stock, so you have to spread your money across at least 4 or 5 different stocks. Number two, you're not fortified. That means that you want to also have your put options in place, because that protects the value of your equity, right? So you could end up generating high income, but your equity value could be dropping, because these stocks that pay the most money tend to be the most volatile. So and the third thing that I would think about is, asking yourself, is this really what you want to do? If you because remember, if you invest in something risky, we talked earlier, for example, about Clover Health, this SPAC that was high flying. If you go to, if you look at Clover Health and the history of Clover Health, and I feel bad, I hate the fact that the sister lost her money on this stock. But the thing about it is that you got to understand, if you're an investor, you're going to lose money. There's no investor I know anywhere that hasn't had times where they lost their whole shirt. And so, but the key thing though is that a smart investor doesn't lose all their shirts. They just might lose the shirt that they're wearing that day. Okay, and that's why you don't put all your eggs in one basket. So if you look at Clover Health, let's go right here. All right, so let's look at this stock, and I'm gonna put it on the screen so we can kind of see it. If you look at Clover Health over the last, say 5 years, you can see where this stock has traded pretty high. It's traded as high as, what is it, $16 per share. Here it's trading at $15 per share. So if you bought Clover Health at say 10 or 11, you made a good return on investment, 60, 70%. It went down as low as 784 and then went back up to 1503. So it almost doubled. So there have been times where Clover Health was a great investment. You have to go back to 2021 to find that. Now, what you do, though, in my view, is that if you are in a situation where an asset is good to you, when the sun comes out, that's when you buy your umbrellas, because you got to know the rain is coming. The rain is coming. I'll say it again. The rain is always coming. So when it gets real sunny and you got that extra cash, that's where you have to think differently from probably about 90% of all the people that you know. That's when you must be proactive and preventative in your investing. That's when you start saying, okay, instead of taking this money and spending it, or instead of taking this money and being greedy and just buying more stock, right? That's what we do. We say, oh, I made 1,000, I can make 2,000 next time. First, you got to fortify and protect what you have. And this is what I mean when I talk about how I live my life. I remind myself, the way I stay optimistic about life is I told my wife, I said, I count my blessings from the ground up. I don't count them from the top down. I don't sit around thinking about all the things I don't have. I give myself room to have ambition and desire to grow, but I don't sit around whining about what I don't have. I focus on what I do have. And first I give thanks for that. And then I think about how I can protect that. You understand? So when you own this stock and you bought it at $7 and it's risen up to $15, don't just sort of think, okay, let me double down and if it keeps going up, I'm going to keep making this money. What you do here is you say, let me take some money and buy some puts. because I can buy some puts, at a price of 12 or something, that'll at least give me a floor so that before I start going off and trying to make more money, I protect what I already have. Let me give you one last example that will help you understand this point very clearly. The Roman Empire, does anybody know how the Roman Empire fell? How many of y'all know why the Roman Empire fell? The Roman Empire was one of the greatest empires of all time, at least among white people. Does anybody know why the Roman Empire fell? Well, the Roman Empire fell because they were so busy trying to conquer new stuff and conquer new territory and take new land, that they stopped defending Rome. They weren't defending their home territory. They just took that for granted. They assumed that everything at home was going to be okay. And then next thing you know, their enemies were invading Rome because they're like, oh, all your soldiers are gone. So your money is like your soldiers, right? So you deploy your soldiers to conquer new territory. That's where you're making the investments and you're allowing yourself to be ambitious, but not greedy. But then you also use the soldiers to defend the territory that you've already acquired. That's where you're fortifying the portfolio. Right. So if you want to learn more about, the whole stock option side of things, again, just go to my website. That training on how to make money without working is there. You can come to our Prime class. I think you're going to like it. I think it's a great way to generate extra income. Even if you have less than 20,000, you can still make money. Even with 5 or 10,000, you can generate a weekly income. You may also want to take a look at the training that's in your stock market package called How to Form an Investment Club. I think family investment clubs are a great way to pool your resources with other people so you can get more done quicker. Okay. All right. So let me hop into the Q&A. Let's see. Sandy Green says, is this a good time to invest in stocks? I think that rather than trying to guess what's going to happen next, I prefer to pick a strategy and just stick with it and not let my strategy deviate based on what is happening in the economy at that moment. Because if you do